So you want to use Doge
Yeah, that's awesome.
or any cryptocurrency for that matter to buy a home. How in the world do you do it? Well, you first have to understand the mortgage world is super behind the times. No matter how many e-smackaroos you have in your digital wallet, it can be tough to use Bitcoin or any cryptocurrency or Doge or whatever you have to actually buy a home. And bottom line, you're going to have to liquidate those funds. There's no way to convert that or to be able to purchase a home with a down payment directly with any type of cryptocurrency. But each loan program is different in how you liquidate the funds. So bottom line, you do have to liquidate your cryptocurrency to use it as a down payment to be able to purchase a home and get a mortgage. And so mortgages are mainly worried about things like money laundering, fraud, and unsecured funds. So for instance, you can't go buy Doge with a credit card and then use that and liquidate it into a mortgage, because basically you'd try to use a credit card for your down payment. So you can't do that. So here are the 4 different loan types and what they require with cryptocurrency. So first is conventional. So Fannie Mae, Freddie Mac, conventional loans. What you need to do is document a paper trail. So the first thing you need to document is the ownership of the cryptocurrency. And it can be difficult to do this because there normally aren't like account statements like you normally would have with a bank or with a bank. So it can be difficult to do this. It's going to be dependent on like where do you have your cryptocurrency to be able to pull up documentation for it. But you need to prove that you own that cryptocurrency. Okay, you also need to prove that you have owned that cryptocurrency for more than 2 months. And this one can be really difficult because if you've only had it for a month, unfortunately, you won't be able to use it and liquidate it to use as a down payment on your mortgage. You also have to be able to prove that it wasn't purchased with a credit card or any other unsecured or borrowed funds that aren't allowed on a mortgage. And again, this is because they don't want you to go purchase cryptocurrency with a credit card and then use that and then liquidate it, because basically you just use a credit card and then kind of like literally laundered the funds through cryptocurrency. So you're not allowed to do that. Then what you have to do is you have to sell the cryptocurrency and then deposit it into a personal bank account. Okay, so it's a little tricky there with conventional. FHA and VA on the other side are basically saying, hey, these are not allowed as they're not formally regulated currencies, stocks, or bonds. However, you can still sell them, put them into your personal account, and as long as it's been sitting in there for 2+ months, then it can be used. And I'll explain that seasoning rule here in just a little bit. USDA basically says, hey, we don't have any policy on this at the moment, again, because mortgages are super behind the times. And so for what most people default to is following the conventional rules if you're using a USDA loan and using cryptocurrency as well. So really, to get around the cryptocurrency problem and any problem that you have with large down payments on a mortgage is understanding why lenders look at this in the first place. So what they're looking at is they're normally going to be looking at your past 2 full months worth of bank statements. And keep in mind, I didn't say 60 days, I said full 2 months is normally what's going to be looked at, those past 2 months. So what they're mainly looking for here is these large down payments. They're looking for money laundering. They're looking for fraud, all these kinds of things. However, anything before that window doesn't have to be checked. They don't have to look at what was going on before that period. So if we're making large deposits or we're liquidating cryptocurrency, we can do it before that window. Then when the lender looks at those past 2 months, they won't be able to see that. And then that's not anything that we have to disclose, because we only have to disclose what was actually in those deposits if we're using those as funds. And so that's a way you can get around it if you're using something like FHA or VA. If you're going conventional, maybe you're running into some documentation issue and you can't use it. Maybe you do have to wait those 2 months to wait out the seasoning requirement in your bank to be able to use it. All right, so if you want to learn more about the 4 different types of loans, I have a playlist over here that you can check out to learn more.